I am an associated member of T3 Trading Group. All trades placed by Derrick are placed through T3 Trading Group. Position disclosure. Same here. I had a couple day trades today that I kind of wanted to keep. They were looking good, but this market did not close well, so they ended up being day trades. All right. Look at that SPY 5-minute chart close. Gross. Let's start with our big picture, though, and work the way down to the small picture. So, SPY's close down 0.8%. Q's down 0.84%. IWM down 0.65%. So, small amount of relative strength. All right, let's talk about this market. I don't like this price action today. I really don't. And we opened up so well today too. Let's go back to our 5-minute chart here real quick, and let's actually start with the pre-market. I was pretty happy with myself this morning. Not only did I day trade the open really well today, but I even started at pre-market. I was buying some stocks and shorting some VXX at about 8 a.m. or so here, when the market dipped back to near pre-market lows. I knew 436 was a key area for it. Then into the close in this last hour, we traded higher. We had a 5-minute pre-market bull flag. We traded higher. By the time the market was opening, we were opening down very, very small. And that was after we initially were set to have a large gap down. Then this opening price action was fantastic on top of it. So we traded back, and I actually thought that made for a little bit of a trickier open. I would have liked a bigger gap this morning. Like if we could have opened closer to 436 and traded versus the pre-market low, would have been solid. It actually, from the perspective of the market, we found a couple of names that worked out really well. But from the perspective of the market, I thought it was a little bit difficult or trickier to be buying the open at 437, 437.50 versus those same kind of pre-market lows around that 435.50. Would have been a lot nicer if we could have opened $1 lower for our longs, because we would have had a larger common gap, and we know common gaps tend to get filled than we ended up having. And with that smaller gap almost opening flat, the IWM actually opened up flat to green. I think it just made for a little bit of a trickier open, and I was really impressed by this opening strength, and it made me kind of excited, because where we were opening here, big picture on the market, I was just hoping, I wasn't hoping for a big rally today. I just wanted us to be able to close above 436 and maybe have a little further consolidation. So by 10:15, when we were still breaking highs and basically going straight up in all three of our indices, I was like, man, this market's even stronger than I thought it was. I thought it would be. It almost feels like the bull market is back, even though, to go back to what I'm always talking about from a probability perspective, right? I like to look at the S&P, Nasdaq, and the Russell in terms of bullish, bearish, neutral. And again, as a lot of you guys know, because I do it all the time, I think it's just a great thought exercise to constantly be looking at the SPYs every morning, every afternoon, and ask yourself that question. Is the market currently bullish, bearish, neutral? And above 436 on a closing basis, I would say that we're neutral. So, we had kind of gotten into this more bearish territory for both the S&P and the Nasdaq at the end of September and, for the beginning of October. And then we had this strong day back here on October 6th, which was another day that we as a team were super on point. The market gap down really big that day on no apparent news. It was really, really large common gap down. And I had been calling for doing some serious buying that morning, pre-market and into the open, and that worked out really well. It followed through with that big gap up. Okay, this candle here, which is Thursday last week, is not a good-looking candle, but it's also not the end of the world, right? It's not a good-looking candle, but it's after a pretty big up move here, getting the SPYs back into neutral territory above 436 and getting us even above the 21 EMA. And if you look at this candle along with the futures market, like Pat likes to do, then this candle doesn't look nearly as bad. But from the perspective of the SPY candle, okay, not great, but again, low volume after a big up move, a little bit of a shooting star, potential lower high off of these 445 highs here, but I didn't necessarily think it was the end of the world. I wanted to see, now that we were back in neutral territory, if we could see this market start to wedge out and potentially work its way higher or something like that. So that was our spies, and then so that's coming into today. And then when I saw initially pre-market this gap down, all right, it's basically like we're filling this gap with a gap, but retesting that 436 area of resistance as support. So a gap down into what I'm expecting as support had me excited again pre-market to do that buying, but by the time we opened, I felt that that buying versus those lows was a little bit more difficult. Yet by 10:15, I was like, oh my god, this almost feels like the bull market's back. And then, okay, fine, midday we get some wishy-washy price action, nothing unusual about that. And then we fell off a cliff. This initial sell-off I wasn't too worried about. Even here, when we broke opening lows, I was like, oh, that's not good. Because even if we closed here at 437, okay, fine, we're still above 436. It gives us that neutral candle, but it's showing us no follow-through to the upside on our daily candle. And then to make matters even worse, the sell-off in the close is disgusting. We lost the 436. We lost the pre-market low. We closed at lows. We closed below 436. And now this is potentially setting us up for this to actually be a lower high in this short-term, medium-term downtrend that the market has found itself in basically since the highs here in the beginning of September. So this is not a good close. And again, it brings us back into bearish territory, I think, for the S&P. And it means that you got to be very cautious on your longs, very cautious on your long swings. We'll talk about individual stocks in a second because I had some good trades today, some stuff I was kind of thinking I could keep overnight and then didn't do it. Nasdaq here, same thing. Nasdaq we know has been basically relatively weak to the Russell since mid-August, and also had a great looking snapback, got back into what I would call neutral territory above the space between 360 and 362.50 has been the resistance zone for the Qs that I was talking about. Okay, we broke back above, and we're right back below, and also just not a good-looking candle here, and a relatively weak index. So both the S&P and the Nasdaq, I really think technically they're just not looking good after today's close. And the IWM is still in the same range that it's been in all year. There's really no update here on the IWM to speak of, except for the fact that it's been relatively strong because of interest rates since mid-August, and we want to continue to obviously pay attention to this TLT. Supposedly, it seems like news-wise, a little bit of a double whammy that rolled this market over. Some kind of negative headlines coming out of China on more regulatory stuff, and then at the same time, there was some language coming out on expectations that the interest rates, that the bond market was going to be down a lot when it opens again, because the close day for Columbus Day, and interest rates were going to be up a lot. I don't really understand why it's not reflected in the TLT. I know that the bond market's closed, but I would think that even with the TLT trading, if there's expectations that interest rates are going to open up a lot, that this TLT would be trading a lot lower than it was, which we're really not seeing. But again, it's like I said in the morning meeting, it's not just the change in interest rates that we need to pay attention to, it's the rate of change in interest rates. And this rate of change accelerating again to the downside and moving quickly, that seems to have a more destabilizing effect on the market than anything else. And especially when it's interest rates that are moving higher, it's the Nasdaq that shows relative weakness, and the Russell, value, energy, financials, those are the sectors that we want to pay attention to for relative strength, which we did highlight this morning. I mentioned that I thought the XLE was now too extended to be able to buy this morning. It gave us a couple of good opportunities to get involved here on October 1st, and another good opportunity to get involved on October 6th. Today, after 3 big up days in a row, plus a big gap up this morning, not the day to buy XLE. So we want this to back and fill a little bit and to reset up. It's still pretty extended from the space between the 8 and 21 EMA. XLF I mentioned as well. And obviously the XLF is relatively strong. But it doesn't really matter how relatively strong the XLF can be, because when the whole market sells off, then this is going to end up getting hit as well. So XLF finished down over a percentage point on the day, but really just pulled back to the ADMA. So there's no alarm bells here for me yet in the financials, but there's definitely a situation that we want to continue to monitor. Really, today's a false breakout in the XLF, and I don't like false breakouts because they can lead to lower price action. But this chart's by no means broken. Like I said, it's just a pullback to the ADMA. As far as individual names go, I think it was a really good day for the team today. First I shorted VXX pre-market at like 25.30 something. That trade worked out pretty well for me. I never got too heavy, but I was able to make a few bucks in it. And then as far as call-outs today, SOFI is definitely the trade of the day today. SOFI got a big upgrade this morning to $25. It's the second one that it's had. So this was also a big upgrade. I forget by which sell-side analyst, and I forget to exactly what price, but I think it might have also been 25, 24 maybe, something like that, on September 22nd. So I used this as an example of what I felt the stock could do today. If you remember, this was also a really good day for us on this thing because we were buying SOFI through 16 and we were able to capture this move to over 17 on that day as it broke some important key resistance areas, namely 16, 1550. It was a great day. And then today, even though it was gapping up this morning, I referenced a pre-market area of $16.70 that we could use as a stop loss. Even though it was also gapping up pretty big, I kind of felt that this could basically just have a repeat of this day, where even though it's gapping up, this stock has the potential for momentum. I wanted to see continuation in this thing. Actually, even exceeded my expectations. I was thinking I would be pretty pumped if I could get a move to 18. Actually went to as high as 1850. Big picture. I've said this in the past. I got a price target of 23 to 25 that I've been working towards with SOFI on my swing trade. But it gave a great opportunity to add to it for people who are already in it, and it gave a great opportunity for traders to get in it who aren't. And in real time, when this thing pulled back to $16.88, I called out a buy here versus $16.70. I was like, guys, I'm a little bit concerned about the extension with the gap up, but you can get in here for less than 20 cents worth of risk. So, really like this buy versus $16.70, kind of that pre-market low in SOFI. The volume was great, and then once it cleared this high again, and that was really your confirmation. It cleared this high, the volume stayed strong, and then it just turned into a beautiful intraday uptrend. Even when the market got weak and the market rolled over, financials got weak, financials rolled over, tech was weak, tech rolled over. SOFI stuck with it, kept with it all day, closed really well. So without a doubt, this was my best name of the day by far. I made pretty good money with it, and I do think that this was the trade of the day. But it wasn't the only one. We had, I think, several good call-outs today. Another one that was on the radar from the morning meeting that I did not get involved, but gave a great initial move was CLF. We spoke about this CLF being long versus 21.10, kind of yesterday's high. And this is another one that just gave that perfect opening momentum move on volume into a daily gap here, that it filled that gap and kind of cleared this $21 resistance that it's put in since this big gap down. I know the last time it was down here at this $20 zone. Really the space, 19 to 20 has been big support for it. This was its earnings report, I believe, back here or maybe this was the earnings report actually. One of these two down moves here to 19 was kind of the earnings report. I remember thinking that earnings report was pretty stellar, and the market didn't initially love it, but then it traded higher. Material names have also been relatively strong along with energy names, so definitely like this one as a trade today, even though I didn't get involved in it, just had too much on my plate. Nice move here to 22, and then had a little bit of a rollover, a little bit of weakness into the close along with the whole rest of the market. So that was a solid one. ANY, I was able to make a few bucks in. This was not on my list this morning, but one of you guys brought it up. So you guys made me money in this. I always appreciate that. We spoke about ANY off this daily shooter. We spoke about how if the volume comes in as a potential to be one of those short squeeze candidates, but we also mentioned that the stock has been much heavier ever since the last short squeeze run it had. The next day, the CEO or CFO or whoever announced a secondary. Secondaries make stocks very heavy. This thing immediately negated that entire day's worth of move and came all the way back down because of that secondary. So I mentioned maybe with that increased flow with the secondary, this thing's heavier. It's been struggling to go, but if the volume comes in with this thing perking back up 2 inside days in a row, ANY could be a good one. I made some money in this one, but I trailed it too tight. And I trailed it tight for a reason, and unfortunately I trailed the wrong one too tight. You know, some of my other names I could have trailed a little bit tighter than this one. So I ended up getting pushed out in this pullback here because I had raised my stop loss. And again, for me to do this for my entire position, it's really tight. But that was my game plan. I kind of just wanted to trail this one tight. I don't believe in the company. I just believed it's a short squeeze kind of candidate if the volume's coming in. So I wanted to keep it tight. I made some money for myself. I got pushed out here at like $7.11 or whatever when it broke this pivot low. So that's a really tight 5-minute trail for me. And I missed this move to above $8, which is unfortunate. When I got involved in this thing, I thought maybe if they squeeze this thing, I could get a move to 850 today. And it kind of almost did that. It went to 830 into the close and closed really well. But this whole second half of the day it did with me. So maybe some of you guys kept your trailing stop a little bit looser than I did, and you didn't get stopped out into this pullback, in which case, also a really solid trade. And then FUBO. FUBO was also on the list, and I traded it today. And this also started to do what I wanted it to do, but I ended up just getting out of it into the close because I didn't want to have extra long exposure overnight with how poor and how weak this market closed. But I like this daily setup. It got a little bit of news. We talked about the inside day and up here for continuation. So basically that would make the buy, 25.53 or so. I think my price was 25.51, so pretty much that price. And it did exactly what you wanted to do. Perked up in a big way. The volume really woke up on this third bar, and then the volume picked up even more on this fourth bar, but by that point it's a little bit extended. So I was able to scoop up some stock on this bar here through the trigger price of, 25.50. Caught this move here where, I was 75 cents in the money. I booked some profit in it, which is great. And then when this thing closed more or less at my entry price, or was about to close more or less at my entry price, and even though I had booked some profit in it, I gave back a lot of the open P&L. I had to ask myself, do I really want to add more long exposure in an S&P that looks bearish and a Nasdaq that looks bearish and an IWM that looks neutral if I don't have a really big profit cushion to do it? And the answer is no. I mean, I'm down to 11 swing positions right now. 11 swing positions is probably the least amount of swing positions that I have had on the entire year. It might be the least amount of swing positions I've had on since the coronavirus low. But that's because the market changed, right? And that's one of the things that we're constantly talking about here as a team is recognizing when the market environment changed, and these S&P and Nasdaq have gone from clearly bullish to neutral to bearish. And again, even today, if we could have gotten that strong close, if this pre-market move could have held up okay, I'm not even talking about highs, but if we could have closed 438.50 or better, then I probably would be keeping FUBO. I probably would be keeping some other stuff and being heavier to the long side. But the market's one of the most important layers of probability, and the layer of probability, which is the market, is just not on my side right now. So I got to be very cautious on adding long overnight swings. So when I'm looking at FUBO here in the close, even though this FUBO closed okay and the daily chart here is still intact, it pulled back to a point where I thought I just had to take the money that I still had left because I gave back a lot of open P&L in it, and just take the money I had left and run, and keep that ammo on the sidelines for this market to potentially reset up. And that is all I got. I mean, again, just to mention it, I think we did a fantastic job as a team today, especially when you look at what the market did. The market today was absolutely garbage, and we were focused on the right stocks, the right times, and I think that we game planned them well and we managed them well, and very easy to have a solid, profitable day today even in what was probably a more difficult trading environment. So again, with that said, oh yeah, LVS. LVS was a Felipe trade. Felipe was all over this Vegas. I really wasn't involved in it, but he was communicating it constantly. It's like 38.40 or so is a big daily breakout. I don't know where Felipe entered it. There's another one. Great relative strength, great opening volume, all the stuff that you want to see here, all the confirmation. And this one also rolled over a little bit into the close. It looks like it gave back $1 with the market weakness, but it still closed above its level. So this one actually closed well enough where I think if you stuck with this all day, you could have swung some of this. But you got to have some concerns about the market right now. All right, first question I'm seeing here is from Rich. How do you know when to execute on a trade besides high volume? I don't know anything about level 2 and reading tape. Should I focus more on learning candle patterns or branch out to learning some level 2 stuff? I was trading LVS, but I didn't have enough conviction to add. When you say add, I'm curious to know if you're already in the name coming into today or if it's that you entered it this morning when Felipe was calling out. Okay, solid. Okay, so kind of a multi-part question here. How do I know when to execute on my trades? Yeah, so there's a number of things that we're looking at. We're looking at all of the layers of probability that we're constantly trying to pay attention to with our trading. And again, definitely check out the probability class that I have as part of my training program if you haven't seen it already, because it goes through all of those. And some of those layers of probability are news, or volume, or technical chart patterns on bigger picture charts, right? So like LVS, which I have up today, I don't know if it had any news, but you definitely have the clear technical level, so you have that aspect of it. And while the volume on the day here doesn't seem to be relatively large, the volume off the open was solid, and that volume off the open is all different pieces of confirmation. So if you were paying attention to Vegas at the open, I was not. I know it was on Felipe's radar. I'd be curious to know his execution on that. But if you're paying attention to this, you could have bought it off the open, maybe versus opening lows or something like that. It's easier for me to speak about. Look, so first of all, you don't want to have like analysis paralysis at the same time, though, where you're overanalyzing everything and then you're like fearful of putting risk on. You're never going to make money if you don't put risk on. So this is kind of why we have our entire process in place, right? It starts with that big picture where we are identifying what is the market giving us as far as the gap, is the entire market in play, what do the big picture market technicals look like, is everything bullish, bearish, neutral? So that can be one thing. And today our bigger picture stuff I think was actually telling us to do a little less, right? Less is more. And when less is more is when we want to focus on names that have news, names that have the volume, etc. So if you understand our layers of probability, well, SOFI's got the news, right? It's got the upgrade. It was a big upgrade to $25. It's got the opening volume, right? We could see that opening volume coming in really early today. You can see it on the daily candle as well. Possibly one of the biggest volume bars that SOFI's ever done. Looks like it's the second biggest volume bar that the stock has ever had. So you got that. Daily level, $17 is a level. Definitely you can make the argument that this level's a little bit sloppy. So you kind of have everything coming together. So when you're seeing everything come together, that's when you got to know to be able to execute to kind of put your risk on. In regards to your question about the level 2, so I also do have a class in my training program on tape reading that you can check out. It's like an intro to tape reading class. My history as a trader, when I got started, tape reading was a lot more important than it is today. So I actually have a pretty strong background in reading tape, reading the level 2 in conjunction with the tape. And I'd like to think that I'm pretty good at it. I want to be sitting here telling you how important it is, and I can't do that because that would be a lie. The longer my career has gone on, the less important level 2 in the tape has become. It doesn't mean that it's not important. It doesn't mean it doesn't help. It's really, tape reading is important in certain circumstances. Tape reading is important if you're trading an earnings stock after hours. Tape reading is important if you're trading an IPO. Tape reading can be important if you're trading news. Tape reading definitely can help with your execution on your trades. But it is not what you should be focusing on, especially if you're just a newer trader. You want to focus on your technicals. Learning charts and learning technicals is so much more important in the modern market than learning tape and learning level 2. And if anything, trying to learn to read tape at this point is probably going to do more damage for you than it will otherwise. There's nothing that annoys me more when I see a trader who's got a really good technical trade on, and then they're like, oh, I got out of my trade because I saw a big offer on the level 2, so I exited it. And that doesn't matter. Execution traders who are trading real size tend to not show their size anyway. They could have just been a spoofer. You could have misread it. It might look big, but it's actually not that big compared to the volume that stock trades in a typical day. So, again, some tape reading can help with your execution. If you're bid 29, there's a refreshing buyer at 30, then you can read that and you can know that you should be bid 31 and not 29. But that's definitely not what you want to focus on. But as far as Vegas goes, again, you just want to be able to see the things I mentioned. That kind of opening volume as it breaks a big technical level, and then you could work that as an ad versus opening lows or something like that. Natalie here asking, would you hold any if you still were in it? ANY. Absolutely, I would. It closed perfectly. It closed great. I definitely would be keeping some of this if I didn't get pushed out with a tight trailing stop. Next here from Jong. CPE big reversal. Would you consider it an RDR? I mean, by the technical definition of a red dog reversal, yes. You have 3 or more up days in a row where it traded above yesterday's high and came back down. So that's like the definition of a red dog reversal. I've said this before. Don't tell Scott that I say this, but I think that the term red dog reversal is misnamed, and not because it has red dog in it, but because it has the word reversal in it. But it always sounds really cool to call things reversals. What it should really be called, in my opinion, is red dog retracement. But red dog retracement definitely does not sound as sexy as red dog reversal, right? So all that this candle here means, and it's not even on confirming volume, is that you could look for a pullback in CPE to the equilibrium zone, which is the space between the 8 and 21 EMA. This thing might just pull back to $54 because that's the degree of extension that it has right now. So technically, yes, it is. Dylan giving a shout out to my YouTube. I appreciate that, Dylan. Check out Derrick the Trader on YouTube. Give me a subscribe. Give me some likes. We're trying to build up a little following there, and definitely give me some private feedback on if you think that stuff is good or it stinks or whatever. Next here from Fran. Oh yeah, sorry about that, Fran. I will do that. I did that on another meeting recently as well. I got to remember when I'm broadcasting onto YouTube that if I do a full screen on this screen, it actually cuts out the symbol and it cuts out the dollar sign. So that should fix it. I got to remember doing that going forward. Thank you for that, Fran. Next from Sahil. I entered ANY of the second bar and you got stopped out at the candle low, and then it proceeded to move in the upward direction. I didn't get in the second time, so I got burnt for a good amount. But moving on.
First bar.
What?
Sahil, he said later on he entered on the first bar, actually.
Okay. But moving on, should I jump in a second time if the trade starts? Okay, so this is, I'm glad you brought this up, Sahil. Let's talk about this ANY from an execution perspective today because it's important. I had a feeling that some people got stopped out when this opening low broke. I was not using the first bar's low as my stop loss, and I'll tell you why. And I think a lot of you guys already know the answer to this. The ADMA didn't catch up yet. When the ADMA, said this so many times, and it still rings very true. When the ADMA on whatever your execution time frame is has not caught up to your stop loss, meaning your stop loss is above the ADMA, it is above equilibrium, you have a significantly higher probability of getting shaken out of a trade that works than if your stop loss is below the ADMA. So I abhor, I really hate, even though I almost never do it, I will do it once in a while if it's a real pure momentum trade. Like with SOFI today, that initial stop loss was also above the ADMA, and I hate doing that. I'm sure I even made a warning about it when I was talking about buying SOFI at 1688. when your stop loss is above the ADMA on your execution time frame, you have a much higher probability of getting pushed out of a trade that's going to work. So I didn't buy a great price in this thing. I bought $7.05 on the first bar of the day with some size. Did not love my price. And I had a game plan to be able to add against me versus my initial out. My initial out was yesterday's high. Why yesterday's high? Because it's an inside day on the daily chart, right? Inside day on the daily chart. 2 inside days in a row. But yesterday's high was going to be, so $6.76 was going to be my initial out on the trade, which basically right away the ADMA was above that. I wanted, especially because my price sucked, I wanted my stop loss to be the opening low and take an extra 10 cents of risk off, $6.85. Was not able to do that though, because I know this ADMA rule where I have a much higher probability of getting shaken out. And I was also super concerned, by the way, when this thing was breaking lows, because really it's a momentum name. So even though the ADMA hadn't caught up, this thing shouldn't really be breaking lows. But if you were watching it, it was actually like one big downtick. It looked like almost like one seller crossed the market, and that caused it to break that opening low, trigger those stops, and immediately it came back up. So for me, instead of getting stopped out there, I actually added a lot of stock. I bought $6.86 and I bought $6.88. And I think I more than doubled my position size on it. And then it started to go. And I dumped a lot really quickly also right away into this uptick. Like I sold some of my average down in front of $7 because I was very concerned about how the opening low broke. So I dumped some stock really quick. And I definitely had my risk covered then. By the time it was getting back above 7, I was like getting my risk covered. And then I also decided to trail it possibly too tight. But that's basically it, Sahil. If the ADMA has not caught up to your stop loss, it means that you are relying purely on momentum to pay you. And while I don't mind momentum paying me, I really don't care what pays me as long as I'm getting paid. I don't like getting shaken out of trades. I don't think anyone likes getting shaken out of trades. So another thing that you guys have heard me say is when choosing stop losses, I've learned now some years ago that I really want to choose the stop loss where I know my idea was wrong. And I don't really know that my idea is wrong if that ADMA hasn't caught up to lows yet. So that's basically my thought process on it. And I know it doesn't directly answer your question about getting in a second time, but I think if you were implementing that thought process, then you wouldn't have to be considering getting in a second time. Because I also really dislike having to do what you're describing here, is get in a second time. Because if you get stopped out, let's say you got stopped out at $6.85 at lows, $6.84. Low here is $6.81. Now you're rebuying $6.95. And now let's say this trade fails, and then you get stopped out at the new lows. Now you just took two losses instead of just taking one loss. You probably would have lost less if you just used a little bit of a wider stop loss to begin with, like what I was talking about in the first part. And that could almost ruin your whole day. You have this trade give you a double failure, and one other trade that you're taking off the open fail for you at the same time. You might be down kind of your max loss for the day, and now your whole day is done by 9:37. I've been there. It sucks. We don't want that to happen. It still will happen sometimes, I promise. You'll still have some really bad opens once in a while. But we don't want it to. So rebuying is always really tricky, and you got to have rules for it. Because I know for myself, and a lot of other traders are the same way, there's a very slippery slope between taking that one smart, calculated repurchase of a stock after getting stopped out and getting into a complete and utter battle fight with the stock. Where you buy, you get stopped out, you buy, you get stopped out, you see it uptick 3 cents, oh my god, I knew I was right, and you buy again and you get stopped out again. It's so easy to get in your head when you do that. It's such a slippery slope that I really try not to do those rebuys. And if I do a rebuy, I kind of want it to be an entirely new trade or entirely new setup. So I'm not going to tell you to not take that second buy. I'm just going to tell you to be really careful about it, because honestly, a lot of times having like a double or a triple loss in a stock is worse than it is better to just have your trade work. Does that make sense to you guys? Did I just kind of say that right? Like taking like 2 to 3 losses in a row, like on you buy, rebuy, get stopped out. Buy, get stopped out, buy, get stopped out. Maybe even a third buy, get stopped out. That is like almost worse for you than actually just having this one buy and catching the full move. So you got to be very, very careful with it. Cool. Next here from our buddy Sebastian. When you have an idea about an opening breakout but the price opens above it, what do you do? Also, where do you put your stop loss if it opens like that? So if you have an idea about an opening breakout but it gaps above it, that's referred to as a breakaway gap. And I actually want to do a little video for YouTube soon about breakaway gaps and common gaps, because those are the two most typical types of gaps that we see on a day-to-day basis, and they mean very different things. So again, what you're describing is a stock opening up above a resistance level. That's called a breakaway gap. And the short answer is, trading a breakaway gap, assuming that the risk is appropriate, you got to see just how much is it opening up above the level. But generally, trading a breakaway gap means that you kind of buy the open versus the level, and that becomes your risk. I also have a whole training program class about gaps. That's probably an hour plus long, if anyone has ever seen it. And I do want to try to film a shorter version YouTube video specifically on breakaway gaps and common gaps at some point soon to give you guys some of the information. But again, that's what you're describing there. And your stop loss basically goes to the previous level or a penny below it. Pete saying he didn't get sound for a little bit. Yeah, sometimes you just gotta log off and log on the VTF. Natalie wants to know my thoughts on if she's short-lived. So I definitely don't like the company. The technicals on both Uber and Lyft have improved, especially on Uber, since this news came out that was preceded by large order option flow. But they both had pretty bearish candles today. So if you're already short-lived, I would definitely stick with the trade. And if you can get this thing back below 52, that's starting to look really good again on the downside. So stick with it, Natalie. Next here from Michael. Do you think the 8 SMA would have performed better than an EMA on the open? The EMA, well, it depends a little bit on the opening situation, but if the price is gapping up, then the EMA should catch up to price faster, because EMAs weight the more recent bar more heavily than the older bars. So because of that, I actually prefer to have the EMA, because it's going to have everything catch up faster on those smaller time frame pictures. So again, because it weights the more recent bars more heavily than the further back bars. So I don't think so, Michael. I think it's the opposite, actually. We definitely want to avoid revenge trading, Sahil. We definitely want to avoid revenge trading. I've been there too many times. And again, for me, I've learned the best way for me to avoid revenge trading is to use what I consider to be the right stop for the idea from the get-go, as opposed to the tighter stops. Mark, I missed the other trades you mentioned. I entered LVS, trying to be cautious and not overtrade the open. In this case, it would have been banks across the board. Should I limit to maybe 2 open trades? Yeah, Mark. I mean, that's definitely one that you got to assess for yourself based on what you're comfortable with and your experience level at this point. When I was a newer trader, I know I've said this in the past as well. When I was a newer trader, I did not allow myself to be in more than 3 trades at a time, because once I found myself to be in more than 3 trades at a time, it's when I got sloppier and I couldn't kind of keep it all together, and I would start making mistakes. Now, over a decade later, it's no problem for me to be in 25 positions at a time and still be able to manage them all properly. So definitely a personal question. You want to assess yourself and assess your own comfort level for your trading and kind of where things are at. Natalie, thoughts on being short Qs and SPYs? Would you hold overnight? Yeah, especially if you've got longs on. Especially if you have longs on, I think, if you're short the SPYs and the Qs today, it's a little bit of a hedge and you kept that overnight. I like it. And even if you don't have longs on, I would rather be short the SPYs and the Qs than long them based on how we closed. So, for sure. All right, squad. I think it was a really good day today, despite the market closing weak. I'm really concerned about this market, actually. I do not like how the indices closed. Let's see what happens with the bond market here overnight and tomorrow morning. I could easily see us gapping back up tomorrow, if the fears of interest rates, opening up significantly higher don't come to play. And I could also see us giving us technical downside continuation just because this market's looking bearish and we closed bearish and we closed at lows. So we'll see how it goes. TLT is, what I'm constantly looking at. And again, that's one of the things I was saying. Like, if the market sold off today because of fears of interest rates opening up higher on Columbus Day, wouldn't this TLT actually be trading a lot lower than it did today? And I don't actually know the answer to that. That's what my assumption would be. TLT is actually pretty extended to the downside now I look at it on like a small time frame on the daily chart. Again, I don't know the answer to that. I don't have a ton of experience trading the equity market off what the bond market is doing on days when the equity market is open and the bond market is closed, because, what is that? I think it's literally 2 trading sessions a year where the bond market closes but the equity market's open. Columbus Day and Memorial Day? Is the equity market closed on Memorial Day? I can't remember. I think it's open. I think that's the other day where the equity market's open and the bond market's closed. Brent here. Just a quick question about holding 25 positions for you now. What's the hardest situation to manage those 25 you really have to watch out for? The biggest thing, the more positions you have open, the more your worst case scenario can be worse. Veterans Day, says Pat, not Memorial Day. It was something like that. So a really important risk management thing that you guys got to keep in mind, especially as you start doing more swing trading, more position trading, as you have more positions open at any given moment, is whether you've got 2 trades on or you've got 25 trades on, it's really important as a trader to always know your worst case scenario and how you're going to feel if the worst case scenario happens. And don't tell me this, oh, well, I've got, 7 longs on and 3 shorts on. So my worst case scenario will be that if all 7 of my longs work, at least my 3 shorts will pay me. I've been in a situation where I've been like that, and my 7 longs went down and my 3 shorts went up. It's obviously very rare, just because that probability can work, but don't think that can't happen to you. So you need to always know what is my worst case scenario with my outstanding positions combined and be comfortable with it. If you're not comfortable with your worst case scenario on all of your positions, long and short, potentially all failing at the same time, if you're not comfortable with that, you need to take risk off the table one way or another. Because I promise you, if you trade long enough, the worst case scenario will happen. So that is the answer to your question, Brent. I think that there's some false prints going off in the market right now that's doing some wackadoo things to some stocks. Natalie. All right, gang. Let's wrap it up for today. It's almost 5 o'clock. Again, I thought it was a great day today. I hope everyone's doing well. I hope everyone's learning. I'll see you all tomorrow.